Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And about 2 minutes away from the end of the trading day, Caroline Hyde, Katie Greifeld, Sonali Basak in for Taylor Riggs. We are counting you down to the closing bell and here to take you beyond that bell with a global simulcast. As with always, Carol Massar, Tim Stenovec bringing together our TV, radio and YouTube audiences. And we pass some pretty crucial moments of the day, and it was Fed front and center.
Yeah.
And it feels as though the market took it as a dovish tone coming from Chair Powell.
Yeah, what's interesting, though, some analysis is, though, wait a minute. Bill Dudley on TV earlier, former head of the New York Central Bank, Federal Reserve Bank, is saying specifically, don't forget that Jay Powell talked a lot about, though, the June dot plot. That's pretty aggressive in terms of what we still expect to get from the Fed, and that's still their mission, bottom line.
And perhaps investors optimistic of, repeated questions and a few answers from Jay Powell about the U.S. not currently being in recession. I think currently being a key word there, but Powell talking up the strength of the labor market. I think, we talk about a dual mandate here. It certainly seems like there's one mandate for this Fed, and that's to get inflation down.
Absolutely. It seems like the full focus is on fighting inflation right now. Really curious to look at this stock market reaction. We've had 4 rate hikes in this tightening cycle. The S&P 500 has ripped after each and every one of them, but the last 2, the next day was a leg lower. So we'll see how much conviction is behind this.
Yeah, we are still looking at a NASDAQ that is on track to close with the biggest jump since at least November of 2020, if not April of 2020 at one point. So you're looking at the market really shrug off a lot of the fears when really we have a lot of data coming up ahead, including that massive GDP print tomorrow alone.
And some former Fed chairs who happen to now be heading up the Treasury speaking after it. I'm sure we'll all be attuned to what Janet Yellen has to make of the GDP print tomorrow. All eyes, of course, on JOLTS data, on various data, and of course, earnings after the bell as we get the micro data on what's happening with jobs and the response from corporate America to higher rates. Today's response to higher rates is the S&P 500 goes higher, 2.6%, 102 points added. The NASDAQ more than 4% higher, 469, and the Dow Jones up 1.4%. Russell 2000, it climbs, but Tim, I think we have some breaking news.
Yeah, I'm watching Qualcomm. The company saying fourth quarter revenue coming in between $11 billion to $11.8 billion. That's slightly below estimates of $11.92 billion. Fourth quarter revenue forecast missing estimates here. The company is seeing third quarter EPS, or $2.96 versus $1.92 year over year. Estimate was for $2.86, so a beat there on that line. Adjusted revenue coming in at $10.93 billion. That beating estimates too. So beating on the top line and the bottom line for the most recent quarter estimate, Caroline, $10.87 billion.
Qualcomm, big exposure to, of course, autos and the auto sector there, but also really pegging itself to the future of VR, AR, the future of where the metaverse goes. And that's, of course, the company that we're going to be waiting on in a moment. But really, Qualcomm has been a company that's managed to source closer to home. It's managed to be very in control of its supply chain over the previous years. Notable, therefore, though, that it is getting somewhat punished, but bouncing around after hours. Carol.
Yeah, bouncing around, as you said, but certainly a key in terms of what we're seeing in the smartphone market specifically and what indications we're having in terms of demand and also supply chain challenges, Katie.
It is interesting to see this reaction really bouncing around, like Caroline said, down about 2.5%. Going to be interesting to see if this move holds. Qualcomm only down 16% year to date. I mean, that's a relative outperformance.
I'm also looking at shares of Apple down just a quarter of a percentage point in the after hours. Qualcomm does have a big exposure to Apple. So sometimes people like to look at Qualcomm results as, sort of a preview of what we could get from Apple because they do supply so many chips to its smartphones.
Yeah, and I'm looking at the Qualcomm guidance here, the idea that revenue will be a little lower than initially expected. You're seeing that margin pressure again, guys, as earnings continues to go on. It's like Katie always says, is it the earnings we're watching or is it the Fed? Thank God these were after hours numbers.
Yeah, I mean, all in all, we have to note that tech has had a wonderful day, and maybe we're just pulling back a little bit after what was added to some of these stock prices on the day. I mean, Meta was up about more than 6% in after hours, so we keep attuned to, therefore, what the market reaction will be after hours in that respect. But I really want to understand where these companies are going in terms of slowing hiring as well. Qualcomm clearly not making it any evident, but we have heard from the likes of Meta. We have heard from the likes of Ford, which is also coming out with its earnings. Interesting what Etsy is going to reflect in terms of consumer sentiment at the moment and how they look to be looking and managing their margins.
Yeah, exactly. So certainly something that we want to know. And I think that jobs part is really important because we keep hearing from companies in terms of their hiring plans. Spirit and Air Frontier agreed to terminate their merger agreement. We know that this has been going on, for several weeks, if not several months at this point. So it looks like that Spirit announces the end of the merger. They're doing that on a webcast. Spirit Air canceling the shareholder vote on a Frontier agreement. So again, we've been seeing consolidation, or at least talk of consolidation, and it being a very popular player within the airspace, but looks like we get some finality here.
Yeah, and remember, JetBlue had come in and made an offer that actually was higher, but the question is what ends up happening, because from a regulatory perspective, investors were a little more concerned that JetBlue could pull this off because regulators wouldn't necessarily approve it.
Yeah, Spirit Air to continue JetBlue talks, it seems, Katie.
And if you look at what JetBlue is doing in response, down 1% right now. Spirit actually popped higher after hours initially, but looks like it's taking a leg lower here. I guess investors really just trying to assess what has really been a long, drawn-out saga. JetBlue continuing to fall after hours now.
Yeah, and really, these are the kinds of deals that really kills trading off a little bit here. The merger arbs that were keeping the market going. You have to wonder what kind of pain they feel or don't feel now after another deal goes bust.
And is this, again, the knock-on effect of the Federal Reserve as well? Yes, we still got some spirits and animal spirits coming from JetBlue and eyeing up Spirit, but overall, this has been a dampening on M&A, a dampening on IPO, but not really a dampening on financial conditions of late since the last Fed hike. And I think that's going to be what's so important. When you see a market rip higher like this, what does Jay Powell end up making of that when he's really trying to tame everyone's desire to be buying into these sorts of assets?
Well, and this is what's so important about the commentary that we're seeing from the C-suite following these earnings, whether they are not confident enough to continue to do deals, whether it's in the M&A space, do strategic decisions. And I think we continue to see this, although he did bring up some concerns about spending and I think capital expenditures, and that's something we need to see whether or not companies continue, Tim, to feel confident enough to do the spend. Yeah,
there's also the consumer side of this, and the fact that Jay Powell brought up rising food prices and people going to the supermarket and not being able to actually buy food that they used to buy with the paychecks they were getting. I mean, inflation is hurting Americans. The question is, can wages come up to match that, and can we get inflation down by using the tools that the Fed has?
Meta Platforms coming out with its numbers, and it looks like it's a beat in terms of second quarter. Facebook daily active users, 1.97 billion. The estimate had been for 1.95 billion. They're breaking out the Reality Labs. Of course, this is a company that's changed its name to focus on the metaverse. The second quarter Reality Labs revenue coming in at 452 million. The estimate was 451, so bang in line. Overall, we're seeing that they are still posting a loss, operating loss of 2.81 billion. We knew that they were going to be investing heavily and losing up to about 10 billion while so doing. Ad revenue, important, in line, 28.15 billion ad revenue in the second quarter. The family of apps revenue coming basically in line, 28.4 billion. And we are seeing that the average price per ad coming down more than had been anticipated by some 14%, Carol. And
here's the bummer, maybe, Caroline, and maybe this is why the stock's down about 3% or so in the after hours, although we're bouncing around a little bit, is talking about the third quarter revenue forecast, 26 to 28.5 billion, and the estimate was for 30.32. So that is a significant reining in terms of that outlook for third quarter revenue. And really, we had heard from people in the market ahead of these numbers, Justin Post over at Bank of America, saying, look, the company's likely to give a conservative guidance and forecast for the next quarter. Let's talk about it with Mandeep Singh. I'm pleased to say, Carol, of course, senior technology analyst for Bloomberg Intelligence, is here with us to dig into a numbers, conservative forecast, decent number print for the second quarter. So what do you make of it?
Well, so I think two things stand out. One is currency will have a 6% impact for next quarter. So we knew Facebook is highly exposed because of their international revenue exposure. I think the big thing that investors are focused on is that ad pricing decline of 14%. What that shows is they're making up their numbers by increasing ad loads. So their ad impressions is okay. They're trying to pivot to Reels and showing a lot of video ads. But really, I think the way they kind of came in line with the 2Q estimates is by increasing the ad loads. And we know if users see more ads, they don't like it. They get ticked off. So
that's exactly where I was going to go, Mandeep. At what point do we sort of see, I mean, for lack of a better term, demand destruction when you're scrolling through your Instagram feed or when you're scrolling through the Blue app, Facebook, and there's just too many ads and it's not a good experience?
Exactly. So look, I think they have an engagement problem with the Blue app. Even with Instagram, their engagement seems to be going down, and they're really trying to play catch up to TikTok. Now, we know from past experience that once a product kind of loses momentum in terms of engagement, and Facebook has done that to an extent with stories and catching up with ad formats, but in this case, the problem really is they're pivoting to TikTok-style AI-based recommendations, so moving away from the social graph. And there's no guarantee that they'll be able to come up with a better AI algorithm, given TikTok has had such a head start.
And we heard from Mark Zuckerberg saying that. He is quoted saying that it was good to see a positive trajectory on our engagement trends this quarter coming from products like Reels, like our investments in AI. I mean, put this into context. How important is this when you think about, the parent platform, Facebook, coming off in terms of engagement?
Well, so look, Instagram, we know, is still quite popular. They still have that creator base. The problem is you have to look at Meta as an aggregate of Instagram and Core Blue app. Now, Core Blue app, if you back out the numbers, really is in a decline. And when I say decline, their ad impressions are going down, and their ad pricing has obviously taken a hit because of all the IDFA changes. So how much can Instagram make up the weakness in the Core Blue app? I think time will tell, but clearly they are growing below inflation, so they have a growth problem here, and I don't see them turning around in terms of top-line growth anytime soon.
Hey, guys, the CFO Outlook commentary, they talk about a continuation of the weak ad demand environment, and they talk about it being driven by broader macroeconomic uncertainty. They also talked about reducing hiring and overall expense growth for this year because of a challenging operating environment. Mandeep, how much of this, though, is Meta-specific, or how much does this tell you something more broadly about our world?
I mean, all these companies overhired. They thought they would continue with that 30-40% growth during the pandemic, and there was certainly a pull forward in growth, and they hired too much. So right now they are trying to freeze hiring and do cost controls, but clearly in hindsight they overhired.
All right, we're going to leave it on that note. Mandeep, thank you so much. Mandeep Singh, of course, of Bloomberg Intelligence, and we continue to see certainly Meta trading in the after hours. We've seen a little bit of a bouncing around, but nonetheless, right now that stock is down about 4.3%. All right, that's going to do it for our cross-platform coverage. Another busy day, Fed Wednesday, lots of earnings. We will see you again, same time, same place for Beyond the Bell right here on Bloomberg.